And let's turn back to the major indexes now. The Dow now in positive territory for the week. And joining me is Jay Pestrichelli, CEO of ZEGA Financial. Jay, thanks so much for taking the time this afternoon. So, a disappointing day on Monday, but quite the rally since then. What's your takeaway from today's action?
You know, it's one of those things that September can bring quite a bit of volatility to the markets. Historically speaking, September is the worst month of the year. I think you just mentioned it a minute ago. When we look back over 95 years, it's down over 1% on average. And actually, from a batting average perspective, it's down more often than it's up. 55% of the time, it's actually lower. That's the only situation compared to the rest of the months. And so we're not so surprised that we're getting some volatility right now in the market.
Now, the volatility that we've seen in the market during the month of September, Jay, evening out a little bit these past few days. The contagion concerns that we saw at the start of the week due to China, are those now in the back seat? I mean, can we see a strong finish to this historically volatile month?
Yeah, listen, I think we can. The Evergrande issue didn't really work its way into the U.S. market. Yes, we had an ugly Monday, but it seemed a little bit like noise. Obviously, now when we look at it with the market being higher since Monday's close, it's proving out to be that way. But even when you look at, say, the high yield market, which would be really where you'd see the first kind of cracks of contagion, we really saw no weakness there.
No weakness there. I do want to get your take, though, on the Fed, Jay, because we did learn yesterday that, yes, this taper is still on pace for later this year, at least to start, and perhaps wind down by the middle of next year, with the first rate rise potentially priced in for now 2022, earlier than what we had learned during the June meeting from the Fed. Why do you think the market is rising in reaction to that?
Well, first off, I think no surprises. The hint of taper, or the, hey, if things are good, maybe we'll taper, just means they're going to be a little less accommodative. But the market isn't discounting this entirely. Yes, the market is pressing towards all-time highs again. But when you look at, say, the fear index or the VIX, the volatility index, you know, it's shown some real resilience, right? Typically, in a fearful market, you'll see the VIX pop up. We've seen that, but in a I'll say a favorable market, or a market that is expecting some low volatility going forward, we'll see the VIX drop below 15. But 15 has been a floor here. So when you see a floor of 15 on the VIX and we just can't seem to get through that, the market is not complacent. You have the potential for a pop. And I do think that's always looming in the background, even though we haven't even had a 5% retracement this year.
We are awaiting earnings from Costco and Nike, Jay. What is corporate America telling you right now in terms of the health of American business?
You know, earnings have been fairly good. If you look back a year ago, the expected earnings weren't even close to how well we've done in 2021. And so corporate America continues to, drive growth, outpacing the expectations. But it brings a little bit of a hesitation with investors. You know, we're an advisor. We're talking to clients all the time. And with markets pressing to all-time highs, the concern that ratios, PE ratios and earnings ratios are being spread out, it's difficult for advisors to counsel investors to get invested, but they need to, right? There's no other place to go. So when you could connect corporate earnings to the stock market, corporations have been doing their job, and the market is reflecting those kind of gains.
Nike in particular, Jay, is there anything that you're watching when this company reports its results?
Well, when I think of Nike, I think of kind of the broader consumer, right? If you're going to spend $200 on a pair of sneakers, that could be a discretionary spend. Although in my house, maybe sometimes that isn't the consideration. But regardless, when you look at how consumers are spending, retail spending is continuing to improve, we look at that as a strong indicator of the economy in general in the U.S. and potentially pushing GDP higher.
Now, when it comes to GDP, we also learned from the Fed yesterday, Jay, that those GDP economic projections have been taken lower from what we saw earlier this summer. Are you confident, based on the economy that we're looking at, that we can continue to see incremental improvement even as we head into these colder winter months when the coronavirus can be more susceptible to spread?
Yeah, coronavirus is kind of looming over GDP, no doubt about it. And I don't think it's just the United States. I think it'll be difficult to envision the U.S. doing another forced shutdown, but you might get that in other countries, and that may, bleed a little into the United States. So, part of the reason why we think, besides the Fed, that volatility is kind of remaining higher and really isn't pulling back is because of this, looming potential impact on GDP from, say, the Delta variant or whatever the next variant is going to be. But I'll tell you, for us, there's not a lot of alternatives when it comes to investing. We deal with a lot of clients and we talk to them about their goals. Hard to put money to work in, say, the fixed income market to achieve growth goals, especially if you need to outpace inflation. So the market ends up being the default, as there's no other alternative where to invest.
Mm-hmm. We still see a grind in Washington, D.C. We're officially waiting for the president to sign the infrastructure bill, another $3.5 trillion spending bill that we anticipate will meet his desk. And then on top of that, a debt ceiling with the deadline to raise that debt ceiling at the end of this month. Jay, how important are the developments out of Washington, D.C. to the path forward for the stock market?
Yeah, impossible to ignore those items, right? Clearly they are in the forefront of our mind. Is additional spending going to push inflation even higher, right? Do we have a supply or demand side push when it comes to higher prices for the consumer? That's obviously a concern. And then the debt ceiling, well, it's not the first time that we've come here. And, we've had shutdowns that have lasted and they always seem to get resolved. And so, while it can bring some volatility and dips in the market in the short term, it's not something that the market expects won't get worked out. Let's face it, the Democrats do kind of control our destiny when it comes to this. And so if they want to get it done, they're going to be able to get it done. And we won't have to furlough workers and those types of things. But in general, this is obviously not the first time that we're going to deal with the debt ceiling issue.
Mm-hmm. I got to ask you, Jay, we are seeing the cryptocurrency market pick up as we see along with the risk on market here in stocks. We're seeing more of a correlation between cryptocurrency and the stock market really on a daily basis. Is crypto something that your company is looking at?
We do look at it. You can't ignore it. We have obviously investors that will ask us about it as well. And when it was isolated, let's go back 2 years as kind of that alternate cryptocurrency thing that somebody might have a Coinbase account and trade on their own. That has changed now. When you look at a lot of corporations that hold Bitcoin on their balance sheets, it's impossible to ignore its impact on the markets. Heck, we even have a lot of companies that price change on a daily basis are tied to the change of, say, Bitcoin or Ethereum. So it's impossible to ignore it. It's something that kind of is adding to the elevated volatility in the market. And so, a dramatic sell-off or movement in any of those cryptos will impact equity prices. So you're correct that we do have a little tighter correlation to the crypto market with the equity markets.
All right, Jay Pastorcelli, CEO of ZEGA Financial. Jay, thank you so much for breaking down this market action with us.